I'm Peter White. Welcome to the Inside Network. Welcome to INDepth. I'm Peter White, and my guest today is Richard Galvin, co-founder and CEO of Digital Asset Capital Management, or DACM. It's one of the most innovative and presumably unique fund managers in Australia, totally doing digital assets. Richard, welcome, and can you maybe tell us how we got to this place?
Yeah, it's great to be here. Thanks for having me, Peter. My background is actually in investment banking, so I spent 20 years at Galvin and JP Morgan down here in Australia, working largely across the TMT or telco, media and technology sector on the investment banking side. I was the co-head of the TMT coverage team in investment banking for Goldman Sachs, and then moved into a financing role and ended up running the equity capital and derivatives market team at JP Morgan. So all around the provision of advice, strategy, fundraising for large corporates as they thought about their M&A strategy, funding strategies. And almost all of my career focused around that sort of high growth technology focused type areas. I left that industry 2016, wanted a change of scenery, wanted a change of career. Wasn't quite sure what it was going to be, but found my way to blockchain. Like a lot of people, just randomly through a contact. Fell in love with Bitcoin, fell in love with the way it was traded. Could see the start of a new asset class, could see a new asset class being born, which is an extremely exciting place to be for anyone that has an
Were you
interest in
sceptical at first or not?
Yeah, I was sceptical. It does take a lot of time, particularly when you come from traditional markets, to get your head around the concept of digital assets and the concept of blockchain. It is extremely unique, innovative, disruptive technology. It's not the way, and it's traded in a way that's very different to traditional assets as well. So you need to get your head around new technology, the way it's traded as well, the way it's owned, the way it's stored. There's all sorts of new sort of innovations, I think, around it.
Can you talk us through the premise of the blockchain technology that's accessible to the average person, if possible?
So if you think about it, a blockchain is effectively just a digital or electronic ledger that has no central point of command and control. So it's basically and you would have heard that people will have heard the word distributed ledger technology before. So it's effectively, if you think about it, a ledger of ownership or that's distributed and held by thousands of different nodes, or think of them as computers at the same point in time. And it's a ledger that constantly updates and creates blocks, usually on fixed terms, like on fixed time scales. Like Bitcoin, every 10 minutes there's a new block added to that ledger. That ledger gets beamed around to the 20,000 nodes and they all update the register, and it happens again. And what's the benefit of that? You effectively have a ledger that's continuously updating, that's available to anyone that can get online and is run by thousands of different computers. So there is no central point where it can fail or be taken down or can be corrupted. It's immutable, it's completely unchangeable. That technology has evolved now to also have more sophistication around what you can do with it, and people are now building applications on top of it. So Peter, if you'd like to think about it as a similar analogy to the internet, where you've got the internet or the protocols, the IP protocols that the internet is run on, and there's apps like Amazon or Facebook that effectively build on top of that protocol. And blockchain's the same. You have blockchain protocols and then people build apps on top of those protocols to effectively provide services.
So is Bitcoin the app?
Bitcoin's the protocol, but there are blockchains that have come around after Bitcoin which have more functionality, which allow apps to be more easily built on top of them than Bitcoin.
So how has this changed or developed investing? Talk us through your daily operation.
Yeah, so I think that there's a number of disruptive layers to the technology we invest in and the way that technology is actually developed. I think the first of them is if you look at the internet or you look at other protocols like Bluetooth or those sorts of things, they're protocols which have been developed and have basically been given away for free for people to use, or people to build applications on top of or integrate into their phones. So Amazon doesn't pay anyone to build on top of the internet, right? I think the difference with blockchain technology is they've effectively unitized the underlying protocol. So you have the ability to invest at the protocol layer, as opposed to just in the applications or the service providers around the protocol.
So it's like having the opportunity to invest in the internet.
It's exactly like having the opportunity to invest in the internet. So you can invest in the growth of the underlying protocol and not effectively have to take a bet on which application or which management team or which service provider will profit or provide a return based on that protocol.
And is Bitcoin the best way to do that?
There's a number of different ways depending on where you think the technology will go. and your risk profile and tolerance as to where you think you should make your investments.
Well, what do you think?
We think we own Bitcoin. It's not the biggest part of our portfolio, but we do own Bitcoin, so we still think it's a good investment. Yes.
What's the biggest part of your portfolio?
We own an asset called the Graph, which is the biggest part of our portfolio, which is an application or a middleware layer that effectively sits between blockchains and apps.
And how many different digital assets are in your fund at the moment?
Yeah, so we run 3 different funds. We run a VC fund, which has about 14 assets. We run the digital asset fund, which has liquid assets that are traded on exchanges, which has around 11 assets. And then we run a market neutral fund that basically just looks to generate income, which basically holds derivatives and futures positions over digital assets. We're 100% focused on digital assets. So coins, tokens, that's the only thing we buy and trade.
Well, it begs the question, what's the performance of those 3 different funds, say in the last 12 months and say the last few years?
Okay, so our venture fund returned about 466% in 2020. It was a top performing VC fund in crypto globally. And that fund's returned about 4,000% since we launched it in August 2018. Our digital asset fund returned about 428%. Last year it was the top performing long only fund in the world. And that's generated about a 13.
I'm just reaching for my checkbook now.
That's generated about a 1,300% return since we started. Our Daft Greeks fund, which is our market neutral fund, extremely different risk and return profile. That looks to generate about a 25 to 35% return. That generated about a 27% return last year.
You launched your first public fund in 2018, and the performance you've talked about is quite remarkable. But have there been periods or year on year where you've lost money for your investors and not gained money?
Absolutely. I mean, like any investment, it's impossible, and it's the golden rule of investing. You can't make high returns without taking high risk. We launched our first public fund in January 2018, and the digital asset market fell 85% after we launched that. So our first fund outperformed that year, but it was a negative year for us. Our investors, thankfully, at that point in time, understood the risk they took when they invested with us.
They stayed with you.
They stayed with us. Some of them reinvested, as you often can in a volatile asset class. Pick your timing, buy on dips, and some of them did that, realising, sticking to the longer term conviction they had about the growth in this space. But digital assets are like any other asset class. There's no nirvana of only things going up over time. To get outsized returns, you've got to take high risk, and high risk means there's going to be drawdowns through that period.
Well, just to be clear, who can and who can't invest in your fund, DACM, in Australia? Is it just like any other sophisticated investor hurdle? You need a piece of paper from your accountant who verifies your assets and your income and your knowledge of risk?
Yeah, so our funds are targeted at that wholesale sophisticated investor, family office, institutional level investor. They're high risk, they're high volatile funds. So from a regulatory perspective and from our own perspective, we need to make sure that investors understand the risks they're taking when they invest with us.
So what's the minimum entry level?
The minimum entry level is around 100,000 US plus for our funds.
Okay, US?
Yes.
Okay. Well, speaking of risk, I think the average punter sees this whole area as very risky. What do you think?
I think it is risky. I mean, like any early stage technology investment, it's risky. I mean, even Bitcoin has implied volatility of around about 100%. So the price, as everyone who's followed it, even at a high level, it's a very volatile asset, and with volatility comes risk. So it's important that people think about it from a portfolio perspective, and look at it as part of a portfolio, and have their mindset on the risk that they're investing, and understand how volatility can lead to losses and how that works within a volatility concept.
Is there any agreement across the board of financial advisors saying how much percentage would be wise to have in digital assets? Like equities and fixed interest, there's all sorts of different formulas and agreed and argued about, but tell me the current thinking on somewhere between 0 and 20%, I think
it's somewhere between 0 and how much I have, which is a lot. So it's less. I think that there is no general consensus. I think that's starting to take shape now, particularly over the last.
Can you see a number evolving where maybe say, hey, you should have 5% in digital?
Well, I can speak on behalf of our investors and the discussions we have with the family office and institutional investors that we generally have as investors. They see our funds as part of their alternatives portfolio, which I think is a rule of thumb that we put 5 to 10%. So we're a part of that alternatives where it sits with VC and private equity, for example.
Without mentioning names, can you give us a little insight into some of the conversations you've had with some of the more large or prominent family offices in this country?
Yeah, I think they, and most of our, I should be upfront, most of our investors come from offshore. So we run a global firm and we invest around the globe. To be honest, to date, most of our investors have come offshore. I just think we've seen adoption at an investor level probably out of Europe and the US probably ahead of Australia, but we think that'll come in time. I think they find the technology and the concept of how it's developed novel, and they can see the disruptive ability of it and the capabilities of it. And if you think about it from a portfolio perspective, most of the things that we invest in are looking to disintermediate and disrupt existing traditional institutions and the way things are done. So from a portfolio perspective, to not have exposure to that disruption is risk. It's like only newspapers at the advent of when the internet was surging. Clearly, one side of that ledger took a lot of pain while the other side of that ledger
that must be a conversation you have with every day with prospective investors, and is the nature of that conversation changing, or the nature of the reception that you're getting or not? I'd be interested to know.
Yeah, I think the nature of it is I think people have become more educated, particularly since we started in 2017. A number of our investors have had more time to think about it. They've had more time to see the technology develop. I think the key thing we've seen over the last 12 months, which has helped our investors get their head around the technologies, we've gone from, we were talking about concepts about how this technology could disrupt traditional functions and traditional financial services, to actually having investments now that have matured enough that they are actually starting to disrupt those functions. We've got assets in our portfolio that have users, that have revenue growth, have substantial revenue growth. And so we've gone from 2017 from basically talking through theses around and concepts around where this technology could go, to now having real life use cases of concept to adoption.
The conversation is Bitcoin centric, and I mean, a lot of people think, oh, you must just invest in Bitcoin, but you don't. You've already told us that.
Yeah.
How do you have that Bitcoin conversation?
Yeah, I think across our portfolio, Bitcoin's about 4% of our assets. So
are people surprised by that?
They are to a degree, but that's our focus. Like we're effectively a picker of high growth assets, and Bitcoin fits within that. But our job is to find the most innovative, most disruptive, and highest growth potential assets for our investors. Bitcoin still is a part of that, and we still think Bitcoin's growth outlook and adoption outlook is great. It's just we find other opportunities as well where we can build a portfolio that potentially has a higher growth return than, say, just Bitcoin alone.
Can you tell us about your team? Do you have traditional fund managers? Do you have technology specialists, or do you have a new class of person? How does the show work?
Yeah, I think it's a bit of all of the above. So we have a team that's sort of split broadly, sort of 50-50 between what I'd say is finance and markets experts and technology experts. I think it's probably a broad statement you can make across the whole of asset management now, and particularly around trading firms. Technology has become a much larger part of investing across the board, and even more so in our space. We invest in assets that are extremely pure, high growth forms of technology. To understand that, we think you have to roll up your sleeves and actually use it. So to use that technology, I've got experts in my team that help our funds use that technology. We help to run blockchains on behalf of projects, so we actually validate and run some of those nodes I spoke about earlier. So we understand the underlying technology. We get kind of a coal-face view of how the technology operates. And it also helps us to generate returns for our funds. So understanding the technology, having technologists on our team is absolutely fundamental part of working in this space. I think the other thing I would note is...
Is there a dearth of people who understand your business or not, or can work in your business?
Absolutely not. No, finding talent is difficult. And that's why we basically run a very broad net. So our team's global. So we've got people in the Middle East, all through Asia, through the Caribbean. So we have a team that basically covers the world. This is a global asset and a global asset class. A Bitcoin that's bought in the Ukraine is the same as a Bitcoin that's sold in Canada, that's sold in Japan. And the technology and the entrepreneurs building across this technology are completely global as well. We've invested in projects out of Korea, we've invested in projects out of Singapore, out of the Middle East, out of North America. So I'd say even more so than the internet, this is very much a global phenomenon. And we're seeing just as much innovation come out of Asia, even out of Australia, as we're seeing out of the west coast of the US, for example.
As of today's recording, Bitcoin I think is around 61K. Mm-hmm. Is that recent uptick a selling help or a selling hindrance? How does that affect your business, that Bitcoin's on a rocket at the moment, or has been.
I think
who knows what it's
Sure.
going to be tomorrow? But
I think it's always a help, Peter, if you have an asset that's performed very strongly. Like Bitcoin was one of the world's best performing assets in 2019 and again in 2020. So I think the risks of not owning Bitcoin are becoming larger, and I think that's what's changed a lot of perceptions amongst investors. I mean, you can dismiss an asset class that you don't think is going to survive in the longer term and not invest the resources or not invest the time or the compliance headache that comes with investing in a new asset class if you don't think it's going to be here. I think what's changed after Bitcoin sell-off in 2018 and then sort of rebirth and growth through 2019-20 is the consensus view now is that this technology is not going away. And when a technology is not going away, you need to have a view if you're an investment professional. It doesn't mean you have to have a positive view, but you've got to have a view. You can't just dismiss it. And so that's what we've seen over the last 2 years is that people have kind of come to the consensus view that this technology is not going away, therefore I need to start learning about it.
pay attention, don't ignore.
Correct. And also don't miss out. If there's returns to be made there, if you're an investment professional, your job is to find an angle to make those returns.
Well, the pandemic, the biggest single issue to strike the globe in a long time, how has that affected valuations and opportunities in the digital currency landscape? Has it been neutral or has it been pro your industry?
I think it's been neutral in that it's been neutral at a macro level in that it doesn't affect the asset class. I mean, these is perfectly decentralized digital assets. They don't require on people turning up to a shop face, or they're interacted electronically over the internet. They're not face-to-face social distancing issues around interacting or trading these assets. So in a way, it's probably highlighted some of the benefits of this technology, which is a decentralized technology. It's, as I said, it's this, you can trade it anywhere, you can transact it across globes and across borders seamlessly. And I think if anything, it's just highlighted some of the benefits that this technology provides. So we're not surprised that through the pandemic, this has been one of the better performing asset classes, because in a way, it's highlighted some of the benefits this technology can offer to the world.
What do you see as the future of the sector? Is it fully mature, or where is it on the continuum of growth and in relation to other industries?
Yeah, I still think it's very early days. We like to use the internet analogy, which we think is probably the most accurate, because it's the most disruptive technology in most people's lifetimes, and we think blockchain will have a similar impact on the world's economies. To put it on an internet scale, we think we're coming out of that dial-up type phase to that broadband phase, which is really the super high growth area where it becomes more accessible to everyone. So you move from that kind of purist native user of the technology, people that have a vested interest in the space, that want to use the technology, but it may not be as efficient as other ways to do it, to that sort of uplift that we saw when broadband became available, where the technology starts to become cheaper, faster, easier to use than the services it's disrupting. And you start to get people using it, they don't even know they're using a blockchain. And that's the real upside. Just like we went from an economy where you had E in front of things that had anything to do with the internet, that doesn't even exist now because the internet's just everywhere and you transact without even thinking you're using the internet. We think we'll see the same adoption of blockchain technology where people will be using financial services or other.
They won't even realise.
They won't even realise they're using blockchain services to transact it at the underlying layer.
That view you've just expressed, is that shared by your peers around the world?
Not predominantly, because we think the assets are still relatively cheap if you ascribe to that view. So that's not a consensus view. That's our view. That's always been driving our investment thesis. That's why I moved into this space 4 years ago, and that's why we're so confident about investing capital for growth into this space.
Well, let me alter the conversation slightly. Non-fungible tokens, do you invest in those? And would you?
No, non-fungible tokens to date largely associated with scarcity assets like art or cards or baseball cards or basketball cards. We wouldn't invest in, I'm not an art expert or an art dealer.
Do you have any NFTs in your funds?
We don't have NFTs in our funds, but we look at the infrastructure and have invested in some of the infrastructure that allows the transactions or facilitates the transactions or the ownership of those NFTs, which would be with the angle we would take, as opposed to us trying to pick which art is going to accrue the most value.
What about the Warren Buffett position? He famously said he wouldn't invest in Bitcoin or crypto. Does he still hold that view, and what do you think of his view?
Yeah, that's my understanding, that he still has that view. I mean, it's the same with any asset. Not everyone agrees on an asset. That's why you get a market. There's always sellers, there's always buyers, there's always people that don't participate. Warren Buffett has a very value-driven approach to the way he buys traditionally industrial assets, and he's very good at it, and he's building obscene amounts of, incredible amounts of wealth and success out of doing that. We're investing in extremely cutting edge, new age technology, which I think, I'm not sure if he would probably agree is not his expertise.
In terms of judging value and relative performance and relative risk, are there any ratings agencies for the crypto world yet or not?
There's a number of firms that collate results for funds like ours and our peers around the world and provide basically yearly reports on performance of various funds and fund managers. There's one called Crypto Fund Research, which our VC fund was rated the best performer in their category last year and in 2019. Our digital asset fund was the best performing long only fund in their database and was the second best in 2019. There's another group called Vision Hill, which also collates results from I think over 100 different funds that specialise in digital assets like us. Our digital asset venture fund has been the top performing fund in their database since it was formed in August 2018.
Given the returns you've talked about, is there a steep upgrade in terms of the number of funds entering the market or not? Or is it still relatively a small sandbox, as it were?
It's been a high growth area in terms of fund managers. In terms of scale, I think that's been the differentiator in our industry. The funds that have been able to weather the downturns. I mean, it's a volatile asset class. It's not, clearly volatility goes both ways. And I think there's been a number of funds enter and exit the space through that time. It's important that people sort of prove, I guess, they have an investment thesis and style that can weather the downturns as well as the upturns.
Can I ask you for an investment tip or advice? What do you think is the most prospective digital asset at the moment, or what that you're focusing on?
Yeah.
And most people might have thought you'd say Bitcoin, but I suspect you're not going to say that.
But that doesn't mean we're negative about Bitcoin. As I said, we've got it in our portfolios and we only own a small number of assets. So we're very concentrated. We don't have to own Bitcoin at all. So we own it because we still see upside in Bitcoin. I think it's a hard question to answer because the risk profile of the asset is so high. And people really need to think about the volatility they can take and the risks they can take. And there is a self-custody part of these assets as well. It's not just ring up your broker and the shares are kept with your broker and they manage all the back office. There is still a risk around the storage and ownership of these assets, so people need to get comfortable around how they can manage that.
Do you manage that risk for investors?
Yeah, we do. We have custody providers, professional custody providers, insured custody providers that do that on our behalf. And so you need to have that overlay when you talk about investors as well, because Bitcoin has an advantage because it is the easiest asset to store securely. There are a number of very professional, easy interfaces that allow you to store Bitcoin securely and safely if you don't feel you have the technical knowledge to do it yourself.
Well, rather than tie you down, mention a couple of other assets that look prospective to you, digital assets.
Okay, so if we think about...
And this is not a recommendation.
Sure. The biggest assets in our fund at the moment, we hold a blockchain out of Korea and an app out of Korea called Terra Luna. That's one of the biggest assets in our fund. We own the Graph, which is effectively an infrastructure, a middleware layer that allows applications to effectively poll and get information from blockchains. So it sits within the protocol that we spoke about earlier and the application, and has a ubiquitous position there, so it has extreme amounts of traffic going through it, and the growth has just been incredible. We own another blockchain that provides super high fast transaction processing ability and has a high growth sort of ecosystem, application ecosystem built in upon it called Solana. They're the three biggest positions across our firm.
Richard, it's been fascinating talking to you. Thanks for your time.
Thanks for having me, Peter.